Hi, it's Conor Svensson here, founder and CEO of Web3 Labs. This is a conversation I had with Anton Mozgovoy, co-founder of Mover, a DeFi neobank. Anton has been passionately involved in Web3 since 2015 when he first got involved via the Ethereum community. In our discussion, we discussed what first attracted him to Web3, why the opportunity for decentralised finance is a cause so close to home, and why he believes finance will be the most heavily impacted industry by Web3. Anton's enthusiasm is infectious, and I hope you come away feeling inspired to build your own crazy ideas, as he would say. Anton, it's an absolute pleasure to have you on the podcast today.
Same here, Connor. Thank you very much. Thank you for having me here today.
I wanted to start by just going back to the early days of blockchain and Web3 and just understand how you came to be interested in the space and how you first got involved in it.
It's a very good question. It's a tough one because it has been a while ago now in human years, and obviously in crypto years, that's way more. Like the dog years. And the way I got into crypto was, I think, a very standard approach. I was working in finance, so banking, and Ethereum. At that time, it was already starting getting popular meetups. There was already a community back then in Toronto. At that time, I was working in Canada. I do not know, I cannot remember exactly, but I was visiting a lot of the meetups, a lot of the tech meetups at that time. I was overall interested in the technology, and somehow I got into this thing called Ethereum. And then at that time, it sounded super ambitious, like global computer, like what is it? How does it work? So that got me interested. Unlike others, I did not join crypto from Bitcoin, but I was straight up, Ethereum, because to me it was about what can I build on it, what kind of technology is it, and I think my relationship with crypto started back then. So it was early 2015 or 2016. That's when I get hear of Ethereum and Vitalik and what was going on. At that time, I was already I would say a very strong but small community of people. But everybody was so welcome. Everybody had these amazing grand visions of what you could do, how bright the future is. And at some point, it just clicked me what you can do with crypto, and combine it with my own ideas and my own vision on the finance perspective and how to make it available and accessible to everybody. So I think that was just a perfect match. And ever since, I'm here, not planning to go anywhere. I don't think you can leave crypto, to be honest. I think that's a bit impossible. There's no exit button. So once you're in, it's you just down the rabbit hole, you can get out.
I completely agree. It's one of those things that you've almost got to limit yourself so that you don't get too sucked in, and it's becomes sustainable over time because there's so much you can learn, and there's just so much happening all the time. And I'm sure hearing that you've been involved for a number of years, it was so different back then in those early days, as you say, in 2015, 2016, small communities. And I always like to sort of talk to people about how you could kind of keep up with what was happening. There'd be a few Twitter accounts, a little bit on Reddit, and you knew everything that was going on back then. But it's so different now.
It is. It still feels very different. That's the thing about crypto, right? Every day, every month, you don't feel, but it's changing. It's evolving. I was just at the DEF Connect conference earlier in April. In Amsterdam. It was the first physical conference since the COVID started. So all the online conferences, all the online meetups, that's there. But physically, a massive event. That was the first one for me, and it was also like an eye-opening event because the ecosystem is so bright, is so flourishing. So many new people, so many young people, so many new crazy ideas, and I love crazy ideas. Whenever somebody tells me, "Okay, listen to this. This is a crazy idea. I don't think it's going to work." To me, it's like, no. Tell me. I mean, everything sounded crazy at the very beginning, and so did Ethereum to me. At first, it was like, well, why would somebody use it? Why would you need it? Like, what kind of a problem does it solve? So it's sort of interesting because Ethereum got me into looking into the Bitcoin's white paper initially and looking into, well, what was it solving? Why was it solving, the issues of the double spending? How was it solving it? And then how can you apply it? So I think my mindset is very, very approach driven, like application driven. It is, you have the technology, and there's many different technologies out there, and the question is, how can you utilize it? What's the best approach? What's the best utility? And that's why, to me, crypto and finance has always been the best use case, which is unlimited in terms of the numbers of things that you could do. What I was saying is I'm very application driven, and when it comes to the technology, it's always about how you can utilize it. What is it built for? What is it made for? And that's why crypto and blockchain, specifically in Ethereum. With finance, it has always been, very, very easy, easy approaching, like easy selling point, easy use case point, because the opportunities are infinite. How you can use it efficiently, again, how can you apply it to what's dear to me, what I'm very excited about, and that's why, again, it kind of clicked. And looking at all these crazy ideas now in Ethereum, you cannot keep up with it. It's impossible. There's aggregators of the news now, and you're still, you still can keep up with like what's happening every single day. And the what we have, crypto Twitter, it's grew from like a couple of people posting something on a daily basis to basically infinite content. There's so much going on, so many good things, so many bad things, but it just shows us that we're growing. And yeah, it's I think we're still very early. We're still very early. There's a lot that we talk about, crypto, but the use cases, the utility of it is still very, very. I would say, like, we're just untapping. We're just tipping our toes into the waters of what you can do with crypto and what kind of crazy ideas can be implemented, which was again an eye-opening thing for me at the Dev Amsterdam. So many new financial primitives, so many crazy ideas how to support the communities, so-called Regen Finance. So basically, how can you bring back the community goods? And those kind of things have always been very, again, close to me. It's hard to say why, whether that's because of my origins, whether that's because of my background, whether this unique combination of factors of why it matters to me. But I think all my journey in the crypto has always been on finding the best approach to solving those, I would say, global, human financial problems.
Yeah, and I'd certainly like to dig further into some of these, as you say, the crazy ideas, because they are one of the things that makes the whole space so exciting, because you have so many different people from different walks of life coming at Web3 from a very different perspective in terms of, you've got people who've come from the financial backgrounds originally like ourselves, but then you've got people who are looking at, community opportunities, or you've got all the artists who are coming to it. And it's just, it touches everyone. And so, on your own journey, what were like the early crazy ideas that you had, and at what point did it kind of move beyond being like this, I'm part of this fun Ethereum community, I love it, but I want to really be involved in it day in, day out? And how did that come together? What were kind of the different projects that you worked on, and how did they pan out as well?
Oh, it's a more, I would say, a more difficult question out there. I think to me, I have this like a little bit of like a builder's mindset. So it's something that if you see you have an idea, you just have this inner urge that doesn't let you sit on your, on your ass like properly. You just have to try it. You have to do it, and it's okay to fail. But then you'll have this peace of mind. If this idea doesn't work, either the conditions or the technology or the execution. So you failed somewhere, but at least you tried. So at least now you have a better understanding of how else you can approach it. And I always had interest in, again, solving those ideas. So one of the biggest things probably in my life is, again, because I come originally from the Ukraine, and to me, this maybe life-turning event was back in the 2014 when basically the initial war started in the Donbass region. So not getting into that idea, but this is very important in terms of like the pre-story out there. So the regions that were affected by the war, and then they were basically captured by like the pro-Russian. I would say like group of people, the regions there were sanctioned. And what it means is that like, I'm exaggerating, but it means this: you had your Visa, debit card, MasterCard bank account yesterday, and you were transacting with the entire world. You had your business working. And then all of a sudden tomorrow, now you cannot do that. Your Visa card doesn't work. It's blocked. It's frozen. And to me, that was an eye-opening event, because all of a sudden I realized that, hold on a second, so the finance isn't really that open. Finance isn't really that fair. I understand the major, I would say, outlook on why it has to be done, but the story of real people, like people on the ground, people that I know, people that I talk to, people that I grew up with. All of a sudden, their lives changed, and it seemed to be something very. It set a very dangerous precedent. I know that it wasn't the first time that it happened, but it happened very close to me. And then when it touches you personally, that somehow just sticks in your young brain. So I always had this urgent idea of trying to find a solution. How can we create a better finance for everybody? So we're not talking about, which has been a long battle, obviously, in crypto, about illegal, drag money, money laundering, whatever it is, you name it. There's always been accusations about that. But my approach was always about the real people, people that actually exist today. They have to eat somehow, they have to work somehow. So what kind of tools that we can bring to them? And that was basically the idea of Humanic, is how can we bank the unbanked? And bank in this terms is being the word, again, transact. We're not speaking about the bank in the traditional sense, but we're speaking about how can we include them in the global economy? How can we let them, speak and talk to the world? How can we interact with them? How can we, trade with them? And then when I was diving deep into that problem, it turned out to me that we're actually talking about billions of people that are excluded. And then it got me thinking about that what happens if you include all those people into the world economy? So how beneficial this would be to everybody, not just the unbanked. And that's how Humanic was born. Humanic did set, I would say, a precedent, and it was one of the first projects out there in crypto trying to focus on public good. And there was a lot of mistakes that we made along the way. There was many unknown things. There was an untapped territory. How can you bring blockchain to, let's say, sub-Saharan African region? And that's basically where my previous life, I would say, non-crypto life experience in finance was very, very beneficial, because of what was happening in the crypto area, and in the, I would say, like, in the overall African region at that time, in terms of like the financial development. They leapfrogged from, let's say, basically having something like bank account to mobile apps. So they just literally leapfrogged the checks era and stage that we had in Europe or the US. They leapfrogged the debit card stage and straight to like mobile finance. And we saw the opportunity that, Ethereum or crypto has the means and has the correct, I would say, incentives and the correct technology for people to start using it. The biggest, I would say, mistake that we've made is that we underestimated how complicated this technology is. And you can try to make it as easy as possible, as UI UX friendly as possible, as user friendly as possible, but it's still so hard to grasp that it takes a lot of time for people to even acknowledge that something like this is possible. You can transact, peer to peer. You can work with other people. You can own your own money, so you can be the custodian of your own money. All of those concepts are still novel, are still new, and that's why there was the first mistake of like how ambitiously and aggressively we tried to help the world. But all of my projects ever since were, I would say, based around that area. We did a lot of I would say DeFi summer 2020. I would say like experiments and investigations, and we farmed. We as the term is, we got drugged. We were exploring the space. We were exploring Mu, and for those of you guys listening, so Mu is was basically an Ethereum virtual machine, and the mempool that exists there. So when the transactions land up in the mempool, they become visible to bots, and a lot of bad things, I would say, the dark forest things could happen while your transaction is not confirmed just yet. And new researchers are, again, helping make, I would say, the network a better place for regular users like ourselves. All of those little projects, little ideas led to a revised concept of, I would say, if not a crypto-friendly bank, but I would say a crypto way to finance or to have finance in your life. So again, we started looking into what kind of needs you have in your daily basis, daily life. Do you need to pay for your rent? You need to pay for your bills. You need to generate income. You need to pay. You want to go outside. You want to buy a coffee. You want to send money to friends. On top of that, it's like how can we make it more, again, regen friendly? So basically, how can we bring the community and public good, and how can we encourage I would say, the community ownership? So all of those ideas basically led to what I've been doing for the past now year and a half at Moving.
So just to quickly kind of sidetrack and to talk about Regen Finance, because you worked about, or you spoke about it, sorry, briefly earlier on, and then you mentioned it just now. So just for the listeners who aren't familiar with the term, could you just talk through it in a little bit more detail before we discuss Mover?
Sure. So let's say, let me start with this. So a typical bank or a typical financial institution, when you are a client, it means that when you're a customer, it also means that you are a means, a way for financial institutions to generate profits. So you are the product. It means that when you transact at the typical normal financial institution, you are the product. That's how they make money. They make money of you. They make money of you transacting, of you lending, borrowing, basically doing your business with this institution. And then Regen Finance, or basically there's many different ways, like regenerative or public goods, is a general term that describes the difference in the vision. So how can you bring the public good into what you're doing? It doesn't mean that you're a non-for-profit organization. It still means that you are a for-profit organization. You want to generate profits, but you want to generate profits in a meaningful way. You want to give back to community. You want to give back to the users. You want to support projects or activities that will help the communities grow. So it's sort of asking yourself a question: how can you build a sustainable business where sustainable means you grow together with your community, with your users, and you give back. And by giving back, you're just helping create this better vision of the world. It doesn't matter how big or how small it is. But what's critical here is this mindset. It's not just about the profits. It's not just about the margins. It's not just about the numbers. How much money have we made? But it's more about how much positive impact have we created. And then you can measure it in many different ways.
So some of the examples that some corporates use would be like donating a certain proportion of their revenues or profits each year to these certain causes, right? And so that's, whilst that's not necessarily finance specific, it's like that's kind of the idea of.
My favorite example is Allbirds. So Allbirds is a US company, and what they do shoes, they do sneakers. So it's not about the product, but it's about the pledge that they make. And what they try to do is that they not only trying to offset their carbon footprint, but what they're trying to do is they're trying to help grow the communities where the sheep are growing from the basically the fur of which they kind of like put into the shoes. So basically, it's like everything around the product. You're just trying to give back and try to help them, like your counterparties, your partners, your community, your users, like whatever it is, like everything that surrounds you. They're trying to give back and grow together. And I think that's a very, very, I would say, if not unique, that's not the correct term, but it's a very different mindset because, again, in the world of, I would say, financial expectations, you're looking at, everybody's talking about stock markets all the time. Stock markets is plunging. Stock markets, is surging. What's the rationing behind it? Everybody's expecting, how much money, how much profit has company generated? Like, what are the margin positions? Like, what are the margin profits? Like, are they looking good? What about the number of the users? Like, they signed up, etc. So, sometimes we just get lost in all those numbers. But sometimes it's like we need to take a step back and see, okay, well, we can generate money, but again, is it a meaningful way to generate that? How can we grow together? And that's, again, like I'm echoing it, multiple times, but that's sort of the motto that we were thinking about is how can you grow, how can you not just make profits on your users, but actually make profits with your users? Is there a business model that would allow you to actually grow together with your users? And to me, that's one of the core principles of, again, I would say, a regen approach.
And so within the confines of Web3 anyway, when you talk about regen, it's this idea of users being able to benefit from the overall success of the protocol or whatever the underlying thing is there that's being produced.
Absolutely. So I think dividend structure. For once, it is a security approach. So it's a bit, I would say, a bit restricted when it comes to like crypto, and it creates a lot of like legal precedents. So if you're a founder and listening to this, always make sure you consult with your lawyers. With all your crazy ideas, and bold ideas that you may have, some may not work in today's reality. So keep that in mind. But I think it also goes beyond that. For example, not specifically endorsing the project, but the idea, let's say Klima. I may have very different, I would say, comments into the project itself, but what they're doing, the mission is definitely, it's novel, it's groundbreaking, and I fully support it. And what it means is that they're trying to create, this, I would say, like a vehicle for, for carbon footprint offset. So if you believe that we should have better, I would say, or our kids or our grandkids or just future generations should have, I would say, at least a chance for having, good environment outside. Well, carbon footprint and carbon offsets is one of the ways to try to tackle it. So when you're asking yourself, well, we see all this, like, I don't know, global warming, like famine that may be coming now because of the Ukraine situation and all of these different things. And you're asking yourself, well, I'm just a small human being. What kind of a difference, what kind of an impact that I make? And for example, Klima is just one of those projects that gives you an answer. Well, it doesn't matter how small you are, you can always make an impact. And collectively, our impact compounds, and that compounded effect, that's what creates changes, massive changes. So basically, it may not even be how you do it, but it's what kind of the precedent that you set with your project.
So sorry, just to say it again, what was the project you were referencing just there?
Klima. So Klima DAO, it's a project on Polygon. Again, this is not like as a project endorsement, but rather saying in terms of the idea that they have. And there's many more coming out. There's Vita DAO, which is focusing on the research, on the longevity research. And the examples are, there's so many different examples now, especially in the DAO sector, which were kind of slowly getting to the Web3 model, right? So now you have all these new interesting ways of collaborating with other people on the topics that matter to you and that that you care about. So it's also very interesting times that we speak about, like how all these events and how all these DAOs pop up and how people have this strong bond that they share together, because they're passionate about something. So yeah, Klima DAO is just like one of the good, like on the scale examples.
Yeah, absolutely. So let's switch our focus to Mover, because I know we want to talk a bit more about that now. It's called a neobank for Generation Z, and so first of all, I'd love to hear you expand a little bit on that. Why Gen Z, and then what is it exactly that it does with respect to, I guess, bridging crypto and digital assets with some of the more conventional things like debit cards or payment cards?
Absolutely. So again, my approach has always been you get the right technology to do the right things. And in the world where we live today, right now, debit cards, credit cards is the easiest form of us transacting, online, offline. You go out there, you buy coffee in the shop. Like, what do you use? You use your debit card, whether that's digital, Apple Pay, Android Pay, virtual cards, or whether that's a physical plastic, metal, whatever it is. Like form, shape, doesn't matter. But for now, that's the most commonly used, I would say, tool and means to transact online, offline. And then we have, I would say, why is it the Gen Z? Where does it come from? Why is it like crypto oriented? A lot of it also comes from the mistakes I've made in the past in terms of trying to bring blockchain to the people, which is expensive. It's long, it's hard, and I'm telling you from the first-hand experience, because a lot of it to do is persuading people that something like this actually works. It exists because it sounds like magic. But when we start by solving, small problems one by one, which is basically how can we make sure that the Web3 natives, crypto natives, like yourself, myself, then it comes to the question: how can we make, I would say, the easiest way to spend, to spend your money, today, right now, online, offline, and that's the problem that we started with. And then the reason why it's the Generation Z is, I would say that it is the easiest cohort of the people, the groups for me to understand, for me as a founder, what values are driven, by this group. And when I'm saying Gen Z, it doesn't really mean age related. It doesn't really mean technology kind of driven group. It's more of a general definition of people who are open to trying new things. And in our case, that's crypto. So basically, what we have in Short and Mover, so we have a crypto debit card that can be topped up from a non-custodial wallet, and then it has probably the easiest way for your utility governance tokens to be used on the debit card that you spend online offline. We also have I would say omni-chain savings, which is where you can hop between the different blockchains, between the different networks, without the need to actually do it manually and interact with different blockchains gas transactions. It's a bit of a hard concept, but if you think it's something like, imagine, I'll give you an analogy, something like, let's say, a bank A gives you some savings terms, and then the bank B gives you, different savings terms. Imagine if you would be able, to kind of jump between the different banks because some bank just gives you better terms on your savings. And what would you need to do? Well, you sort of like need to take the money from one bank, put the money into the bank, another bank, etc. And if we substitute the banks with like blockchains, there's many different ways to generate your yield. So basically return on your money, which in our case is stable coins. So it is in a form and a shape, a new way of savings, right? And then we just make it very easy and accessible, because in the Web3 world, you are the custodian of funds, you own your funds. So only you should decide where you want to keep your money in. And then what Mover does is Mover allows you to move it across these different blockchains without the need to actually do it yourself manually, bridge funds, swap the tokens, deposit into the vault. So like all of these things, complicated and sometimes I would say very new to a lot of the users. We just make it easy, and that's why we want to push it, right? We want to make it as accessible and easy to everybody. You don't have to be a crypto degen sitting, and then watching all these projects 24/7, trying to understand like all these different terms, but you have to have the access to the technology, the underlying technology, which is again Web3.
Okay, so just to kind of talk it through from the perspectives of users, so they might have some stable coins such as say USDC, for instance. They might have some project tokens and some cryptocurrencies as well there. And so with Mover, they can take those and in effect, would they load them onto the Mover wallet, and then they from there they could spend them? I know that there's the sort of DeFi ecosystem piece as well, but just we'll start with the basics and then kind of build on top of it.
No, so basically you keep your money where you want to keep them, and that's where we're hard advocates on privacy, on the non-custodial aspect. So you keep your money in your non-custodial wallet of your choice. You want to keep it in a MetaMask wallet, you do, whether that's a cold storage wallet, Trust wallet, it is. And then when you want to spend it online or offline on your debit card, Mover debit card, that's when you top up. So let's say it's just like topping up your bank account. So you're running low on the balance and you want to pay for bills or whatever, and then just just add some money there. Same idea here, same concept here. You keep your money where you want to keep it, but then when you need to spend it on the debit card, you can top it up. And what we allow you, and what the tech that we created allows you to do it from a non-custodial wallet in a very easy manner. As you said, USDC, project tokens, utility tokens, governance tokens, and basically we make this DeFi world of decentralized exchanges and AMMs and exchanges and all of these state robbed. All these crazy variations of so many different tokens that we have now created, as a crypto community, we just make it more accessible, and that's just a key part. I would say a solution to say again, how do we support this grand vision of we have this new financial way of living your life. And it starts with the easiest, I would say, way to spend your crypto assets, like online or offline, which comes in a form of the debit card, like crypto debit card, and everything else, it comes on top and additionally. So what can you offer besides spending? Can you offer savings? Yes, we can. Can you offer let's say DeFi loans and lending? That's what's coming up. So you just start adding bit by bit to create this ecosystem, to make sure that we can actually say at one day, I have not used my bank account in years. It turns out that all I have here in Mover is sufficient for me to live my life. I'm generating income, right? So I work somewhere, I get my salary, I get my, I don't know, revenue, whatever it is, and then the daily life that you have, the expenses that you have in your daily life, you can manage them through Mover. So that's like the ideal goal of where we're heading towards.
So it's kind of a decentralized financial services offering, in terms of you've got like a debit card component, but then the intent is to build this wider ecosystem. So yeah, people can load funds onto the debit card for spending, but then there's also going to be gateways into, I presume, almost partner protocols and services where you do some vetting just to ensure that people aren't likely to end up with a rug pull kind of situation, and that it's a sort of trusted protocol. But that's kind of the idea, is that it'll be this well, it's based on DeFi and blockchain, but it's people ultimately have the control and a more sort of frictionless experience than if they were to do all of this stuff manually.
Absolutely. So the motto there is you keep the control of your own funds, and that's why DeFi is a money Lego, as they describe it. There's a protocol, and you don't need to ask the permission to use it. You can just go on chain, interact with a smart contract, and nobody can say no to you. It's not like you have to become a client, right, of a protocol. And this open world or open money world, like Lego, kind of building stuff, that's what allows us to find the best solutions out there. As I said earlier, right, there has to be the right tech for the right thing. So we know that we can build everything ourselves, and that's not the right approach. That's the old approach. You build everything in house. You have everything controlled. You have you've built hundreds, as they say, bicycle, like a wheel, like just yet again, because hundreds of the people did exactly the same thing before you, but you're not going to use them because you want to build something yourself. We see the completely different approach. We see collaborative approach. You can be the best in very niche specific things, right? You can be the best in some aspects and not so good in other aspects. And it's about leveraging, again, all this like open DeFi community that we say. And that's also a very interesting topic to speak about, because is DeFi really open? Let's say, as we advocate for, inclusion, as we advocate for, I would say, really, really strong principles of, again, like ownership, right? So you own your money, you decide where you want to put it. But are the projects actually that open? Like other principles that they follow are actually, that open. And it's also a very interesting concept. What I mean is how many projects build open source code? So how many projects build open license code? And that's just not DeFi, right? It's also NFTs. So what I mean is we still have a long way to come to the point where we are indeed, and everybody in the space is, I would say, following the dogmas and the early days principles of open, I would say open space, open collaboration, open work. And then what we're trying to do on our end is again just, it's a part of giving back. All the code that we have is open source and it's open license. If what we have built will help you build a better product, that's it just makes me happy. It's not about winning. It's not about we've built something ourselves and we're going to keep it to ourselves. It's about, if I can save someone time and they can build a better product, it's an open market. That's it, right? So they just created a better product. So it also forces you to innovate, but also allows so many new market entrants, so many new young folks, so many new projects with no, I would say, significant backing or funding to use on what we've built and build on top of it. So create new solutions. That's the power of DeFi. So that's when you create something and it can be used by somebody else. And sometimes you cannot even imagine or predict the ways they're going to use it. But it creates a very interesting, very interesting new financial primitives. Sometimes you're just like, oh, okay, so I have this NFT, which has some market value, and all of a sudden I can now borrow against it, and then make my borrowed amount yieldable. So basically, your NFT generates you interest now. All of a sudden, like, how is that possible? Like that hasn't existed before. It's like trying to put a close example is saying that, well, okay, look, I have this painting on sitting on my wall, and somehow, besides like the value appreciation or I don't know, just pure aesthetics that it gives you, somehow it generates you like interest, yield. So all of a sudden it becomes a passive income. Now, is it possible like in the I would say like in the traditional world? Not really. I mean, there's other ways you can rent it. Let's say you can lend it to the museum, but in here, it's open. You can create contracts that would interact with other assets, and people decide whether they want to like join and try it, and that's so fascinating. Like this open future. This is so exciting. I mean, if you are considering listening to this, you're considering or trying or want to build something, do it. Like do it. You're gonna fail 19 times out of 20 times, but that one time that you nail it, that's going to be fantastic. So whatever, again, crazy ideas that you have, that's the time, man. That's the perfect time to fail. That's the perfect time to try something and build something. So I think that's the key motto here is again just go and do it. Like it doesn't have to be a technical project. It doesn't have to be I don't know a crypto protocol. It doesn't have to be a company. Anything. Just go out there and try it and do it because. I mean, if not now, then then when?
We're going to have to get you to say that again when we wrap up too, because there's still a lot of things to discuss first. But I think it's definitely a good call to action for the listeners there. But a couple of other things on Mover that I wanted to touch on. One was NFTs, and you certainly mentioned them on the site. And how do kind of NFTs fit into the landscape or your plans? Because they're quite well known these days, NFTs as a concept.
Absolutely, and NFT as a concept is also a very wide concept. Like many different people see NFTs differently, and what I mean by that is typically we think of NFT as like, oh, it's an image of something, like a Bored Ape or a CryptoPunk. That's an NFT. But NFT is anything non-fungible. We have a long history of playing with NFTs because for those of you guys listening, so let's say the difference between a token, which is like a fungible token, and let's say like a non-fungible, NFT, is in the code. It's just different code formats. So different code formats, but both of those things are tokens. So we just can do different things with those tokens. And then what we're doing is we're playing a lot with all these non-fungible tokens in a way. How can you link this to, I would say, like financial products? How you can gamify it to create, a stronger bond within your communities. NFTs could represent access to something. NFTs could represent your, I would say, your bonuses or like your tiers in terms of like, let's say, like a card program to use in anything. So basically, the opportunities are limitless. But where we are heading towards too is one of the things that we are, I would say, building behind the scene is called MetaCard. So as the name Meta comes, it has something to do with metaverse. But basically, we have this grand vision of connecting and enabling all of the metaverses that are going to be there. Every day, there's someone new coming up and saying they want to build their own metaverse. And what we see right now is we have all these different blockchains, all these different networks, all these different metaverses, and they're all segregated. They're all separated. It's like tiny different worlds that live by their own rules. And then at some point they just want to make bridges, let's say to Ethereum or other networks to kind of like transact. But we want to enable every Web3 user. So we want to say that, okay, well, you're playing Axie Infinity. We have you. There's going to be a Yuga Labs metaverse. Whatever you guys' economy is going to be there, we want to be there. So MetaCard is this extendable NFT contract that will allow you to aggregate those rewards balances and then make it easy for you to use it on your debit card. So in a sense, that's our way to try to say, okay, well, there has to be the debit card for the entire crypto. And crypto is big. Crypto is DeFi. Crypto is like, I would say, as traditional as here's Bitcoin. I just have my Bitcoins in my wallet. What do I do? And crypto is also very, I would say, new and innovative and crazy. Sometimes is metaverses. You've got your plots in a metaverse that create some sort of crops, and crops generate the food, and food is given to some creatures, and then you can sell creatures. You can create the entire economies around those like creature lands. like all of that is super fascinating, and there has to be this, I would say, deep part that supports the people behind those, I would say, like games. So people that actually play those games, people that sometimes even generate their like income, especially if we're talking about let's say South and Asia regions. And it's been all over the news when Axie Infinity case, like blew up in terms of the success. It was incredible by like how many people use Axie Infinity as their main source of income. So people are literally playing the game to make money. And then again, it's sort of like creating this open finance, because all of a sudden, for people who find that they can make more money by playing the game, by supporting this whatever inner economy that they've created, all of a sudden there has to be this partner to to make it happen, to make the transactions flowing, to make the rewards available, and that's where we're heading again towards to. So it's a strategic move to make sure that again we can have a better and open finance for for everyone in crypto.
And no doubt, as the sort of metaverse narrative start to play out, the size of the opportunity space there is absolutely immense, given how big gaming is and all the different social networks and so on that connect people together.
Oh, it looks like gaming is going to be this next big sector. It's already huge, but where we're going to, I think it's, as you said, Connor, it's just going to get so much bigger than what it is right now.
And so the other thing, just to, I think, go a bit deeper into is regulation and how that kind of comes into play. Because I'm sure you've thought about the perspectives of regulators, and that the certainly stable coins are one area which we can talk a bit more about in a moment, but it's certainly perceived as that's going to be a key area for regulators to kind of step in, at least have regulation there to help protect people, to ensure that there's less likely to be stable coins being depegged and so on. But how do you think, with respect to Mover, you see the regulatory landscape coming in and affecting it? And what are your expectations?
I think it's a perfect time, because as we are speaking right now, there's an announcement earlier today from the Queen Elizabeth II, so that's the UK Queen, and she announced the launch of the new the government body, which will make sure that I would say crypto can be seized easily or easier in an easier way. So it's just one of the examples of I would say how the world is trying to adapt by like what we've made here in our sandboxes. Crypto is out there; it's not going anywhere, and regulators are still catching up and trying to find I would say regulatory frameworks that do work. That's not always the case. It's ups and downs. We've seen a lot of, I would say, very, to my mind, very bad approaches or very bad attempts to, ban crypto or trying to break it. It's not going to work, because it is the future, and it's slowly starting to, to become a fact. So what I am in for is I'm in for, I would say, very pragmatic and proper regulations that do protect the consumers and customers, but at the same time, they do not shut down the innovation that we have simply because it doesn't fit the old narrative, simply because it doesn't fit the old world, simply because it does just it's all of a sudden it changes the status quo. And this is important to understand, that there will be I would say, the compromises from, say, both sides. Very hard crypto advocates and very hard pro-regulation advocates. When it comes to regulated products, you have to abide by the law. So you have to follow the law, whatever it is. You can fight on the legal scene, fight the legal battle, saying, well, we advocate for better laws. But if you are doing something that is regulated as, let's say, debit cards, you always have to abide by the laws, which obviously we fully do. And to be honest, you wouldn't be able to offer products right now if you wouldn't be abiding by the law. So basically, I would say all the conversations that I've had since we started Uber, I would say one of the most common narrative that we have is like, oh, but overall crypto is bad because crypto helps to launder money. And this is like, to me, probably the, I would say the, trying to find the, would say not a strong word out there, but this is something that shows me that there's a very, very strong misunderstanding. It's just that, some regulators or some regulatory bodies or people behind them, they just do not grasp the concept. Because if you're trying to launder money on the public ledger that stores information forever, you must be a very bad launderer. All of a sudden we don't talk about cash, and somehow money laundering has existed before crypto. And asking me whether it facilitates money laundering, and it's just, again, it's so, it would be stupid to try to launder money and literally have a public ledger, trace information saying that you did it, that you cannot remove and you cannot change it. So it's always been, a very interesting case. But I do think that there's also a lot of new companies that are trying to analyze the blockchain, so basically public transactions, and trying to prevent the fraud, because as always in every industry, the fraud is always going to be there. But we've seen so much negativity around crypto, like scams and everything. But just today, I received yet another text message on my phone, and it was an SMS scam. So we're talking so much about crypto scams, but we can't stop even just basic telephone scams. How is it possible? So, and telephone scams existed way before crypto, and then yet they're still here. So I think it raises a bigger question on whether, I would say, we do things properly. I would say from the ground based principles like KYC, the banking industry, all of those, I would say, core principles to what's happening here in terms of how how I would say how the regulators are trying to approach and limit things to protect people. So there's still a lot of work ahead, but I do believe that things will get better and things will get, I would say, more pragmatic, and things will get more efficient as we move forward. Crypto is still very, very new. People are still just starting to get, to, I would say, to the depth of the crypto. Besides just saying, "Oh, I hold ETH or I hold BTC." But people are starting to ask, what can I do with my tokens? What kind of opportunities are in front of me? And again, this opens up a lot of more work for regulators to find that balance between, again, personal freedom, the innovation that we bring. And, when I say we, it's not us, but it's the industry. It's all these amazing people. And as I said, saying at the Dev Connect, all these crazy teams, crazy ideas, crazy thoughts, all of those people bring, something right to this industry. And finally, so the protection side of things, how can we make it safe? We everybody wants to, have a safe environment for everybody. Everyone wants to make sure that, bad things do not happen. So it's a work in progress.
Absolutely, and as you say, it's important to get the balance right between there, so that you're not sacrificing innovation too much in support of regulation. And scams, you're never going to be able to get rid of them entirely, unfortunately. So the phone illustration you mentioned there shows. So let's talk a little bit about stable coins as well, because it's been quite a tumultuous sort of day or two in the with some of them. For the listeners, Terra USD, or UST as it's known, which was the third biggest stable coin. It's pegged to the US dollar, and that actually sort of dropped as low as 62 cents on the dollar during the last day or so. And it's certainly, Anton, an area that you're very interested in talking about. And whilst we're not here to talk generally about news as such, I think it's quite helpful to talk more generally about stable coins and your perceptions of them.
Yes, who would have expected it? But stable coins kind of slammed the door, and opened this new world for everybody. This is the area in crypto that has grown significantly in the past 4 years. We're not talking about the incumbents like USDT, so Tether, but let's say even USDC in the last 4 years, it grew from nothing to $60 billion. And stable coins, I would say, is a new technology, and it's a new way to digitally transact with your money. So there's a lot of the different approaches, right? So how stable coins are managed, but what I could say on the scale and the magnitude of what happened, yesterday in the past days with USD is definitely sets the new precedent, and I think it's going to be studied going further. So to give us the scale, right? So UST had 18 billion UST issued, so $18 billion. And the model of how UST is backed, so this algorithmic approach, is also a novel approach, and it's also a very controversial approach, and it also raises a lot of questions about stability, about I would say the sustainability of the project itself. And what I wanted to touch base here is on since Mover has a lot of a lot to do with savings, so basically stable coins. We explore stable coins, we study them, we run different models on the risk models, we run different black swan scenarios. We look into different models of what's happening right now on different blockchains. How do people generate yield? What are the interest bearing options? UST model has been a very I would say lucrative one because again, for you guys not knowing, so UST basically you can mint UST with Luna, and then you can deposit UST into something called Anchor and generate up to 18% annually. 18% annually on your dollar. Now that's amazing. Like for example, here in the UK, the bank savings account is 0.01% annually. So it's basically with the official inflation, so CPI above 5.5%. When you put your money into the bank savings account, you literally get less money back. So it's that's it. So basically, 18% annually on your on your dollars. That was an amazing offer. And that's also a big part of the problem of like how this entire model works. So I think the key point here is innovation comes at risk, and that's something that we should never forget. And when the size and the scale of a mistake is high, $18 billion, that's a lot of money. That's a lot of money. And how the stability of the peg is controlled, it's just a decision of a small group of people behind the project could affect lives of millions and hundreds of millions. And it also raises some, I would say, like questions about the regulations, right, Conor, as you said, as we talked previously. So ultimately, stablecoins are not going anywhere. Stablecoins are only going to expand from here. There could be new stablecoins, new ways and forms, and that's again the innovation that crypto provides. You can create whatever crazy form and shape and idea of your stablecoin. And if it gets picked up by the market, you never know. I mean, this could be the next reserve currency, for example. It is, nothing is impossible. So it's where again the innovation, like pure imagination, and the combination of again knowledge of deep math, finance, and sociology can create all this interesting products.
Yes, it's definitely a very key innovation, as you say, and there's a lot of innovation happening at the moment, and I'm sure that over the coming weeks, months, and years, there'll no doubt be new ones and new approaches and so on. But yeah, it does feel like they're definitely here to stay. So let's fast forward to the future. Just a question to kind of think about, where we're headed, and are there specific ways in which you like to think about how Web3 technology will be impacting our everyday lives in 10 years from now?
I wish I would say Web3 is going to be everywhere in your life. But again, in my experience, looking at where we are, I see Web3 will be deeply integrated into the finance. But I think this is going to be the strongest, I would say, use case, or the area where it's going to be focused. Web3 provides a lot of opportunities for new ways of working together, like DAOs, new ways to fundraise, which again I would say a lot of it is maybe I would say legally questionable ways, but it creates technology creates this different opportunities out there. Healthcare, again, environment, education, like all sort of things. But I do believe that the biggest impact that we're going to see in the nearest 5-10 years is definitely going to be this huge change of, I would say, of the finance landscape. And what I mean by that, looking at, as we were just speaking about stablecoins, the governments will have to adapt because, once again, if it's an open market, you have to have a better solution. You have to have a better product, and money is the product. So the governments will have to innovate. They will have to innovate on policies. They will have to innovate on technical solutions, on whatever ways it is. So I think that what we created here, we created the precedent that I would say tech people, geeky people, and it's like it's a good way. It's a compliment. Can tackle and can change this global status quo in finance. So if you are working finance or interested about finance, or you somehow deal with money in your day-to-day life, and everyone does, obviously, you are going to be affected by Web3. There's going to be new instruments. There's going to be new ways to transact. There's going to be new ways to lend, borrow, all sort of different new instruments of like how the money works, so what you can do with money. That's definitely changing. The second, I would say, to none would be the ways we collaborate. With all this, I would say, rapid digitization or remote work after the COVID, it just clearly showed us that a lot of companies are still, I would say, to my mind, somewhere it's like living in the past in terms of the way they force people to collaborate and work together, and crypto and Web3 is definitely, I would say, changing that and pushing that. So I don't know what would be the terms, right? What would be the legal ways, the structures? We already know, for example, Wyoming has introduced the DAO, like legal framework. So there's a lot of things that are going to be changing there on let's say, the people and human collaboration side of things. But we're still yet to see how it's all going to play out. So finance and human collaboration, those are the two main, I would say, aspects of something that I'm, deeply following, and I believe that are going to be, well, if I may say, challenged. That's definitely the word. But maybe they're just going to be rebuilt, like reconstructed from what we know now. That's also a very possible outcome of the magnitude of the changes that we are creating here.
Absolutely. So just to wrap up, if people want to reach out to you or follow you or whatever else, what are the platforms that you're active on?
Twitter. Fortunately or unfortunately, Twitter is where, if you're interested about crypto, if you're interested about reaching out to me, so do find me on Twitter. It's NIARBOTNA. So find me, Google me. And again, if you want to do something together, if you have questions, if you want to talk about again how we affect your day-to-day life, or what we can do together and make it better, I'm always open. I'm always in for collaboration, and again, maybe we can change the world together.
And if people want to sign up to Mover as well, well, what's the website? What are the best ways to learn more about it?
Just the website. So it's viamover.com. So via is via mover. That's one word. No dashes, no dots, nothing. So viamover.com. So go check it out yourself. Again, it's all open. It's not custodial. So connect your wallet and just dive deep down the rabbit hole of Web3.
That's it, and start creating and implementing these crazy ideas, as you said.
Absolutely. Again, our code is open source, so GitHub, again, via Mover. Go check it yourself if you're a developer, and of course, yeah. So the website is the easiest way. So that's the web app that you play. I think it's just yeah. It's really good thing to wrap it up, because we advocate for the open collaboration. So let's build something cool together. That would be final words out there.
Awesome. Well, Anton, it's been an absolute pleasure hosting you, and I look forward to chatting again in the future.
Thank you very much for having me here today, Conor. It was a great pleasure.
Hi, it's Conor Svensson here again. I hope you enjoyed this episode. I'm really excited to share with you that I've written a book, The Blockchain Innovators Handbook, a leader's guide to understanding, adopting and succeeding with this disruptive technology. I've been wanting to share my learnings about blockchain and Web3 for a number of years with a wider audience, and I'm really excited that I can do this now. This book covers everything from the fundamentals of the technology through to opportunity identification and implementation for your business to ensure that you can be one of the big beneficiaries of the wider transition to Web3 that's taking place now. The book is available in physical as well as digital form. For more information, head to web3labs.com/innovators.